Hi everyone. What you see in my screen is the gold prices in India in the last 1 year, and you will look at this chart and you will see that roughly 6 months ago, September 2022, the gold prices were hovering at around 50,000 rupees for 10 grams. Gold prices in March 2023, when I'm shooting this video, has gone up to roughly 60,000 per 10 grams. That is almost like 20% appreciation in the gold prices in the last 6 months. If you look at the yearly returns, that means roughly 40% yearly returns when it comes to investing in golds. At the same time, if you look at the Nifty chart, you will see that in the last 1 year, Nifty has given minus 1.07% returns. Now, that tells us very important fact that whenever gold has performed well, Nifty is not performing well. And also when Nifty is not performing well, when the overall stock market is not performing well, gold performs really well. I also want to prove this with another chart that you will see on my screen here. What you see is that yellow line is the gold line, blue line is the Nifty chart. You will see that back in 2011 when Nifty was completely down, gold was performing well. Also, if you look at around 2014-15, exactly the same story where Nifty was performing really well, but the gold was not performing at all. Likewise, if you look at the COVID here, clear pattern of reversal where the Nifty is not performing, Nifty was very down, but gold was performing well. This leaves us with a very, very important lesson that for us as investors, in order for us to de-risk our investment in stocks, we need to use gold in our portfolio as one of the hedging mechanics because it will balance our portfolio. In this video, I'm going to talk about how to invest in gold ETFs, and I'm going to speak in the 4 simple points. One is what are the basic meaning and the working of gold ETF. Number 2, what are the key benefits of gold ETF? Why should you invest in gold ETF? Number 3, what are the best gold ETFs? And finally, I will cover the taxation as well. Let us get this video started. Let me now cover the basics of ETF. So in order for you to invest in gold ETF, all you need is a demat account, you need internet connection, and you need some money to invest in gold ETF. I've logged into Zerodha as my broker account. You might have any other broker account, that's not a problem. Gold ETF work exactly like any other ETF or individual stocks. Let me show you on my screen how to go and invest in gold ETF. Let us say you log into Zerodha here and type gold ETF here. What you're going to see a bunch of gold ETFs appearing here. Please do not worry, I'm going to tell you which are the best gold ETF that you can consider investing in. Simply go ahead and click on, let us say I want to buy Kotak Gold ETF for an example. You can go ahead and type the units here. Let us say 100 units of Kotak Gold ETF is what you want to buy. You're going to pay 5,000 rupees here. Now, the very important fact here is that when you are buying 100 units of this ETF, what Kotak will need to do is go ahead and invest this 5,000 rupees and purchase physical gold of the purity 99.5%. Now you will say, Rahul, what is the proof? I don't know whether there might be some scam going on here. Please don't worry about it because gold ETFs are regulated by SEBI's mutual fund standards, meaning there is always a statutory audit, the legal audit that Kotak or any other ETF provider will have to undergo. And they will have to make sure that whatever investment money they have got, Kotak have gone ahead and bought the physical gold exactly for the same money that the investors have put in. So investing in gold ETF from that perspective is absolutely safe. Your money is backed up by the physical gold, right? Let us now also talk about few of the other key benefits of investing in gold ETF. Number 1 is that there is no entry and exit load when you're buying gold ETF. So what I've shown you is there is no entry and exit load. You can go buy, sell same day, next day, there is no charge here. Entry and exit loads generally are applicable on gold mutual funds. I can cover gold mutual funds as a separate topic. Let me know in the comments if you would like me to cover gold mutual funds. Just type gold mutual funds and I will cover that as well. Point number 2 is that ETFs, gold ETFs are accepted as collaterals for loans. So if you want to go and take a loan tomorrow, you can produce this 5,000 rupees of gold ETF as the collateral or the guarantee that banks, majority of the banks will accept it. Point number 3 is from a taxation perspective. When you are investing in gold ETF, you do not need to pay wealth tax. You don't need to pay any GST. You don't need to pay STT. You don't need to pay any VAT and any other taxes. There is only a capital gain taxes that are applicable on gold ETF that I am going to cover towards the end of this video. So wait for that, please. Also, number 4 is that please be aware that when you're investing in gold ETF, you are not paying any making charges. You're not worrying about the storing the gold. You're not worrying about the theft or any of that sort here. You're not worried about the purity of the gold ETF because, as I said, it's all backed up by 99.5% of purity of the gold. So these are the key benefits of gold ETF. Now let us talk about which are the best gold ETF that you should consider investing in, and how do we go about selecting, what are the criteria to select proper gold ETF. What you see on my screen is I have created a separate screen called Gold ETF on ticker tape. If you would like to have access to this screen, please let me know in the comments that you want the screen. I'll be happy to share that in the links. But right now you see there are 12 gold ETFs that I've selected here. And what you will see, first thing is that their 1-year returns and the 5-year CAGR you will see, there's not massive difference because every gold ETF is doing exactly the same thing. They are taking money from you and they're going and buying physical gold. And whatever is the gold price appreciation, that is what they are passing back to you. So from a returns perspective, you're not likely to see huge difference. But still there are few factors that we need to consider when we are investing our hard-earned money in any of the gold ETF. The first thing that I would like you to understand is the average volume, right? That's what I've selected as one of the criteria. Liquidity in case of ETFs is the most important thing that we need to consider and analyze for. Let me explain very simply. Let us say you go ahead and invest in gold ETF and you bought 1000 units of that ETF. After 2 years, you want to go back and sell that in the market, but there are no buyers, right? What happens is that because there are no buyers, because of the demand supply issue now, you will have to sell that 1000 ETF on that day at a lower price than the actual NAV of that ETF, and you are going to lose the money, right? Now, therefore, we need to invest in those gold ETF where the number of transactions that are happening in a day, the buyers and the sellers are huge in quantity, right? So that whenever you're going to sell and buy, you get the right price for your ETF, right? So look at these 12 ETFs here and you can see number 1 is Nippon India. That is the most traded gold ETF right now in the last 3 months average volume if you look at. SBI number 2, 795, ICICI Pru 776 and so on. I also want to prove this point with some good examples. So if we look at, let us say Nippon India, which is the highest traded gold ETF versus Invesco India Gold ETF, which is the lowest traded ETF, I want to show you the difference in terms of the pricing here. So let us say this is the Nippon India ETF Gold Bs, right? If I come down here last 1 month, you will see green bar here is the NAV or the price at which any particular point in time during the day you will go and buy and sell this particular ETF, right? While the blue line is the NAV that is calculated at the end of the day, very much like a mutual fund, right? Please focus here because it's very, very important point. Once you understand this point, you are never going to make mistakes in selecting good ETFs, not just the gold ETFs, right? Now, if you look at this example here, on 15th of March, the green line, meaning the spot price of this ETF was trading lower than the NAV, meaning if you bought it on 15th of March, you would gain money, right? But if you're selling on 15th of March, you're going to lose the money, right? While on 20th of March, if you see, it means the NAV was lower, the spot price was higher. That means if you bought this on 20th of March, you're losing money. But if you're selling on 20th of March, you're going to gain the money. So the returns of ETFs are very individual depending on how many number of units are buying and selling and when you are doing it, right? If we compare this with Invesco, so if we compare this with Invesco, you will see in the last 1 month, the huge gap between the blue and green line. If I just show you back, the difference between the price for Nippon is very low because it is more traded, right? There is a lot of liquidity. The buyers and sellers are there in the market. While in case of Invesco, you see a bigger gap between the two lines. That means whenever you're investing in this Invesco, you are likely to either lose or gain money depending on whether you're buying or selling and what's happening on that day, right? Therefore, I would never recommend you to invest in something like Invesco because of the very limited trading that is happening on that ETF. You might lose money when you're going to sell it, right? Therefore, Nippon from a volume perspective is number 1. If we come back to here, any of these top 5, I would say the top 5 I have arranged in the order are good enough liquidity. You don't need to go for Nippon just because it has got the highest liquidity. as long as there is enough liquidity in the ETF, and this top 5 is good enough from my perspective, right? The second factor that we need to consider is the expense ratio. Very much similar to mutual funds, ETFs come with the expense ratio. If you look at these 5, you will notice that ICICI Pru has given the lowest expense ratio, and after that is the Kotak, which is given 0.55, right? So from that perspective, I would recommend ICICI because it has got the lowest expense ratio. Your cost will be really low. And if you look at the returns as well, the last 5 years, ICICI is given 13.25. As I said, very minimum difference. Kotak, in fact, has given 13.52, slightly better than Kotak. So from investing in gold ETF, best ETF, I would suggest you recommend you invest in any of the top 5s. But even within the top 5, I would go with ICICI or Gold Kotak ETF because these two are lowest in the expense ratio, have given slightly better returns, and from a liquidity perspective, they are absolutely fine. Let me now talk about the capital gain tax that is applicable on gold ETFs. So gold ETFs, they fall under debt mutual fund category from a taxation perspective. Before 1st April 2023, the rules were very simple. They were beneficial for investors like you and me, wherein up to 3 years of holding period, which is the short-term capital gain, used to be income tax slab. So if you're on 20% income tax slab, you will pay that 20%. After 3 years, it used to be 20% tax after indexation, right? That used to be the rules before 1st of April 2023. But after 1st of April 2023, government has removed all of these taxation benefits on gold ETF. So on gold ETF from 1st of April 2023, the rules are very simple that whatever is your capital gain, whether it's a short term, long term, whether you're holding it for 1 year, 2 year, 3 year, 4 year, 5 year, whatever, you have to pay tax on the capital gain as per your income tax slab. So if you're under 30% income tax bracket, unfortunately, you will have to pay 30% tax on your capital gain on the gold ETFs. From that perspective, sovereign gold bonds are better. They still have the capital gain tax advantage, provided you continue to invest for 8 years in sovereign gold bond. So if you, from a taxation perspective, as sovereign gold bonds are better, provided you can continue to invest for 8 years. But when it comes to gold ETF, if you want to look for a short-term investment, meaning 1 year, 2 year, 3 year, 4 year, and you want to be free from any time buying and selling, gold ETF is still a good bet. I would highly recommend you to consider investing in gold ETF. If you like this video, please press the like button. Let me know in the comments. Also, let me know any other topics you would like me to make videos on. If you would like me to compare sovereign gold bond or gold mutual funds and gold ETFs and the physical gold all together in one master video, let me know in the comments. I'll shoot that master video as well. With that, signing off, keep rocking.